Am I already live? Is the sound on? Let me check this. Right. We didn't mean to go live just then. I didn't even click the live button then. I don't actually know what happened then, but we'll start now anyway. Right, okay. I'm ready to be started. Right, okay. Hello and welcome to Crypto Saving Expert. Here you can learn the latest cryptocurrency news and know exactly what is going on within the markets. We do a live stream every single day talking about the news, talking about Bitcoin's price. So now that we are live, unknowingly, let's take a look at what we are looking at first today. That was a bit of a messy morning start to the video, wasn't it? Steve and Ben, hello and welcome back. Thank you very much for tuning in once again. Right. Now we can start properly. That wasn't the best of starts. We have Bitcoin at $16,830 and Ethereum at $1,250. I've pulled up the Bitcoin chart here. And it's happened again. The RSI and the MACD are both pretty neutral. The RSI is showing almost exactly 50, so we're not overbought and we're not oversold on the 1 hour chart for Bitcoin. The MACD is showing growing bearish momentum, but the bearish momentum is slowing down a bit. We have a lot of news to uncover today. We've seen a lot of stories overnight. Obviously, we had the federal minutes. So let's talk about this. First of all, we have Indonesia plans to launch its own crypto exchange in 2023. So even in the depth of this bear market, we are seeing some adoption. Indonesia plans to launch a national crypto exchange in 2023 before it shifts regulatory oversight of the industry from its commodities agency to the Financial Service Authority. And I didn't even mention then, we don't have Jordan on with us today. It is just me, but you basically had just Jordan yesterday when my camera completely broke. So now we'll just let's carry on with this article anyway. Philip said, good morning, keep up the fantastic work, guys. Thank you very much, and thank you very much for everyone that's tuned in. Please like and subscribe and press the bell notification to help us get to 100,000 subscribers in 2023. Anyway, continuing with the article, crypto assets and their trading in Indonesia are currently under the supervision of the Commodity Futures Trading Regulatory Agency known as I'm not even going to try and say that word. This is why we need Jordan. The agency also supplies commodities contracts, but Indonesia is carrying out reforms in its financial sector, and its FSA is scheduled to assume the crypto and blockchain regulator role in the next 2 years. The country's crypto exchange should be up and running during this time. So we're seeing adoption, and that is brilliant. If we take a look further down in this article, we'll see in early November, Indonesia shared a report on central bank digital currencies, where its central bank stressed the need to adapt to the times through the issuance of CBDCs. Now, I think we're going to see a lot more news about CBDCs this year as a lot more countries adopt them. It's not the best way to go, in my opinion. There's different ways they can be taken. It'll be interesting to see how it plays out, how they are enforced in people. We've seen countries that have brought out CBDCs and they've had no adoption whatsoever. And we need to see how they get pushed onto people. If it's done in a nice way, which I doubt it will, then they could be beneficial for us and very easy to use. If they don't, then we may see an issue. Player One says, what's up, Jess? Thank you very much for streaming in. Don't forget to like and subscribe. Let's put a like goal on. Jordan always puts a like goal on. Let's try and get to 50 likes in this live stream, because there's only 50% of us here on the stream today. So let's try for 50 instead of 100 and see how far we can get. Let's take a look at the next article here. We have Coinbase reaches $100 million settlement with New York's financial regulator. According to a press release by NYDFS, on Wednesday, the settlement includes a $50 million fine Coinbase will pay the regulator for violating AML laws and a $50 million pledge to boost the company's compliance program over the next 2 years. So we've seen this take place, and this is going to push more and more exchanges to enforce KYC and AML. I think exchanges that don't have these checks in place are going to become a lot rarer within 2023 because of things like this taking place. In the grand scheme of things, it's not a huge issue. It's just a lot of people come into cryptocurrency for transparency, and when you can't achieve that on a centralized exchange, It makes it more complicated because people will then have look for decentralized exchanges possibly, or it'll just scare people away altogether, because centralized exchanges are a very common way that new people enter the space. And when people within the space are saying, oh no, don't use that, you need KYC, blah blah blah, or even just the process of doing it might push people away from cryptocurrency in general. So it might slow down adoption slightly, but I don't think it will do enough harm to the industry. It's just something to be aware of, that it will become rarer and rarer, in my opinion. The compliance program is supposed to prevent drug traffickers, sellers of child pornography, and other bad actors from opening accounts within the exchange. The regulator said Coinbase's compliance issues were discovered during a routine examination in 2020, while it detected problems with the exchange's anti-money laundering controls in 2018. The cryptocurrency exchange had initially agreed to hire an independent consultant to help oversee its operations to ensure it met AML laws, but that did not solve Coinbase's issues, prompting the regulator to open a formal investigation into Coinbase in 2021. NYDFS said by late 2021, Coinbase had a backlog of around 100,000 alerts about potentially suspicious transactions that were not adequately checked. It added that the exchange only carried out simple know your customer checks on individuals before allowing them to open accounts. Going back into the chat, Gunnar said hello, hi to you all. Thank you very much for tuning in. Please like and subscribe. We're on 8 likes and we're only a couple of minutes in, so let's try and get to 50 and then we can beat what me and Jordan get together. That would be good. Let's carry on with this article. Superintendent of the NYDFS said Coinbase failed to build a functional compliance program that would keep pace with its growth. Founded in 2012, Coinbase is a leading cryptocurrency exchange in the US with more than 100 million users globally and about $7.6 billion in market capitalization. And he said, although we have not always been perfect, our goal has always been and will always be to build the most trusted, compliant and secure cryptocurrency exchange in the world. And that was Coinbase's chief legal officer who said that in a statement. Right, so let's carry on to the next article now. Let's check what's happening with Bitcoin's price quickly. See if anything's going on over there before we continue. Not much movement this morning. We saw a little bit of volatility last night, and that was from the federal minutes coming out, and we will talk about that later in today's video. So make sure to stay tuned and like and subscribe, and head over to our Twitter as well. I'll put the Twitter link in the chat right now, so you can please go over to Twitter and retweet that for me. There we go. Right, carrying on with today's articles. Don't forget, if you have any questions, drop them in the chat and we'll read through those at the end of today's video. The next article we have here is the UK National Crime Agency is launching a specialised crypto team to fight cybercrime and fraud. So the UK government has a lot of the time over and over again said they want to become a hotspot for cryptocurrency. We haven't seen much action for that. We saw a speech in Zebu Live last year where we had a member of parliament come over and discuss cryptocurrency. It turns out they were paid $10,000 to do so, though. So controversial opinions here. Whether we will become a cryptocurrency hotspot or not, I don't see it being likely. We're usually pretty slow on these kind of things, but you never know. And it would be great to see, but I'm just not got my hopes too high. Anyway, the United Kingdom's National Crime Agency, NCA, Cyber Focus Command and National Cyber Crime Unit is ready to launch if the words were coming out of my mouth, it would run a lot smoother. Is ready to launch a dedicated crypto unit responsible for proactively investigating the UK's cybercrime events involving the usage of cryptocurrencies. The creation of a crypto crime unit follows the loss of $3 billion in cryptocurrency worldwide due to hacks and fraud. So when we're seeing these regulations take place and we're seeing them trying to tackle the problems within cryptocurrency, this is usually their attempt of getting on top of it. We are going to see a lot of regulations in 2023, I believe, or the start that a lot of governments getting the ball rolling. Whether those regulations are good for the space or bad for the space, we shall see. I do believe we do need some regulation after the FTX fiasco. We need some sort of reassurance within the space. We are trying to get transparency on centralized exchanges and have proof of reserves that help us with that. But if there is some regulation, it would be a little healthier for the space as long as these regulations are put in the correct way. I've seen a lot of draft bills that I've read through, and I don't really agree with them in a lot of aspects. So I would be concerned if new regulations came out. I mean, there's nothing we can do about them. They may be good, they may be bad, but we need to work away. The governments need to work away in the best way possible to make it so that we're happy in the cryptocurrency industry and we can still grow. Because at the end of the day, the governments that are going to thrive from this industry are the ones that allow us to grow in the right way, and they need their regulations need to allow companies within cryptocurrency to grow successfully. Anyway, that was a load of waffle. I hope that made sense. NCA informed Decrypt that the initial squad would consist of 5 officers stationed at its current NCCU, but the brand new government organisation will also seek to hire a so-called cryptocurrency investigator with solid experience conducting blockchain forensic investigations on serious and organised crime as part of the project. According to a recent job posting, the investigator will be responsible for supporting ongoing and further investigations where specialised cryptocurrency competence is required, and will take a proactive lead in identifying possible targets for more inquiry. Solid experience in conducting blockchain, this basically a job ad on it. The National Crime Agency is offering a salary of between $40,000 to $43,000. That's not very high for a blockchain analyst. For somebody that can actually create blockchain code, it's usually very around that price. For somebody that can actually audit blockchains, I would say that's pretty low. I'm not sure they're going to get too many people jumping at that job description. Anyway, these actions are just one more policy towards the UK's government's goal to eliminate what they refer to as dirty money. The NCA's initiative intends to increase regulatory attention on cryptocurrency assets in the UK. The Economic Crime and Corporate Transparency Bill, presented by the UK government in September 2022, made clear their intention to combat money laundering and fraud, notably by expanding the ability of law enforcement to seize cryptocurrency used for criminal purposes. Now, let's take a look at the next article here. Let me check back in the chat. Steve said, would love to see 15 to 20k Bitcoin for the next 8 to 12 months. It would give everyone paying attention time to accumulate. And you know what, Steve? I don't give too much price predictions on this channel. I have my own channel that I do that on at Interpret Crypto if you want to see that. But I don't think you're far off. I don't like to say too much. We are just strictly talking about the news here, keeping it very professional. I don't want to give any price targets away. We don't do financial advice on my channel or this channel, but we especially do not give any price targets here. Anyway, let's carry on with the next article. The US Federal Reserve, FDIC, and OCC warned banking organizations about crypto risks. So the regulatory agencies in the US have kicked off 2023 with a cautionary note to banking organizations regarding the risks associated with crypto assets. On Tuesday, the Board of Governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency, they've all got such long names, issued a joint statement highlighting the aforementioned risks associated with crypto assets and its participants. So the statement said, the events of the past year have been marked by significant volatility and the exposure of vulnerabilities in the crypto asset sector. The 3 agencies provided the following 8 potential risks the crypto industry poses to the traditional banking system. The existence of frauds and scams. Obviously, we do have fraud and scams within cryptocurrency, so does the traditional system. Anyway, unclear legal guidance on custody practices, redemptions, and ownership rights, with several court cases ongoing regarding them. And I think that is something that needs to be made clearer. It's very common within cryptocurrency. When you try and look into different things to check the guidelines, there's such blurred lines. We've seen it with XRP. The difference between a commodity and a security is the Howey test, and the Howey test is the most unclear test I've ever read. So there's a huge debate within cryptocurrency if things fall as a security or a commodity, and that's not the only problem within cryptocurrency trying to get regulation. It's so unclear. The regulation for cryptocurrency is so unclear that it's just so hard to abide by certain rules in some jurisdictions. Anyway, There's inaccurate and misleading representations and disclosures by crypto asset companies, including misrepresentations regarding federal deposit insurance and other unfair, deceptive, and or abusive practices that could harm retail and institutional investors. High volatility in the crypto markets that could impact deposit flows of crypto asset companies. Instability of stablecoins and their potential for bank runs. Now, we've seen that with UST last year. I hope we don't see that again. That was painful. Contagion risk brought about by the interconnectedness of crypto asset sector participants through opaque lending, investing, funding, service, and operational agreements. A lack of mature risk management and governance practices in the crypto asset sector. And finally, we saw increased risk associated with open, public, or decentralized network, particularly in areas of governance mechanisms and oversight. Absence of clearly established roles, responsibilities, and liabilities, and vulnerabilities related to cyber attacks, outages, lost or trapped assets, and illicit finance. So the banking organizations are not prohibited nor discouraged from providing banking services to customers. In addition to the above, the US Fed, FDIC, and OCC stressed the importance of mitigating risk in the crypto asset sector and avoiding their mitigation into the banking system. However, the three regulatory agencies explained that they did not prohibit banking organizations from providing banking services to any class of customers as permitted by law. And they have added the agencies are continuing to assess whether or how current and proposed crypto asset related activities by banking organizations can be conducted in a manner that adequately addresses safety and soundness, consumer protection, legal permissibility, and compliance with applicable laws and regulations, including anti-money laundering and illicit finance statuses and rules. So what we want to see is they're warning banks about the risks within cryptocurrencies. Banks, they can't tell banks not to work with cryptocurrency companies. We want to be able to move our money to and from places. Oh, if banks stop you moving your money into a cryptocurrency exchange, then they're proving why we need cryptocurrency in the first place. We want to be able to move our money to anywhere we want to. Taking a look back at the chat, Morgan J said, back to work for me. Love what you're doing. Thank you very much. If you are enjoying this, please like and subscribe. We are going live every single day with the latest cryptocurrency news. Let's carry on now to the next article. The next article, both me and Jordan covered on our own channels last night about the Fed. Now, the Fed wants flexibility on rates as inflation remains key focus, minutes show. So we've got the meeting minutes from the Federal Reserve's meeting on December the 13th and 14th. And in the meeting, they agreed the US central bank should slow the pace of its aggressive interest rate increases, allowing them to continue increasing the cost of credit to control inflation, but in a gradual way meant to limit the risks to economic growth. So what we're seeing here is we've had interest rates increase rapidly in 2022, and that is being to try and slow the rate of inflation. Now, usually when we see just to show what the impact on cryptocurrency is, when the interest rates are low, the interest rate is the lending rate to each other within the banks, but it falls down onto us. So when we are borrowing money off the banks, if the interest rate is low, that means we can borrow more. And if the interest rate is high, we can borrow less. But it's us, it's retail investors, it's businesses. So when the Fed bring down interest rates, this means more people within the entire economy are borrowing more money. And that means everybody has more money, and that means they can put their money into riskier assets. When the interest rate is high, people are borrowing less, people are spending less, and people are moving out of risky assets. And obviously cryptocurrency is described as a risky asset. It is highly, highly volatile. So when we are seeing these increased interest rates, it's negatively affecting risky markets, but they're increasing these interest rates to try and slow inflation. And inflation is still increasing. We're in COVID. So what we've seen normally for this to work is we see the interest rate try and combat the inflation rate because we're looking, it's demand led. But now it is looking like it's supply led. So it's not, there's two counter arguments to this. What we are seeing now, though, is we've seen this huge increase in interest rates. We saw it over and over again in 2022, and we saw every single time that news came out, huge volatility within cryptocurrency, and then a huge price movement dependent on the rate, and it also depends on the expected rate. We have the assumption of what the rate hike is going to be on that day, and then when we actually hear the news, if it's what's expected, there'll be less volatility, and if it's not what's expected, if it's more or less, the volatility will change in different directions. Anyway, carrying on with this, they're trying to stop increasing the interest rate at such a pace, but they still want to make sure that they are controlling inflation. But when they keep increasing interest rates they're increasing the interest rates so fast that it is causing the economy to, they want to make sure that it doesn't risk the economic growth. So, I tripped up my words a lot then. The minutes of the meeting, which were released on Wednesday, showed policymakers still focused on controlling the pace of price increases that threatened to run hotter than anticipated, and worried about any misperception in financial markets that their commitment to fighting inflation was flagging. But officials also acknowledged that they had significant progress over the past year in raising rates enough to bring inflation down. As a result, the central bank now needed to balance its fight against rising prices with the risk of slowing the economy too much and potentially placing the largest burdens on the most vulnerable groups through higher than necessary unemployment. Most participants emphasised the need to retain flexibility and optionally when moving policy to a more restrictive stance. The minutes said, indicating officials may be prepared to scale back to 0.25 percentage point increases as of January 31 to February the 1st. Meeting, but also remained open to an even higher than anticipated terminal rate in high inflation persists. So we might just see a 0.25% increase in interest for January. Now that is the prediction. If we see higher than that, then we'll be looking at more volatility within the space. Carrying on down this article, the minutes put a premium on explaining that the decision to move to slower rate increases should not be construed by investors or the public at large as a weakening of the Fed's commitment to bring inflation back to its 2% target. Participants reaffirmed their strong commitment to returning inflation to the committee's 2% objective, the minutes said. And they also said a number of participants emphasised that it would be important to clearly communicate that the slowing in the pace of rates increases was not an indication of any weakening of the committee's resolve to achieving its price stability goal. And now we have this article about longer inflation fight. So policymakers approved a 0.5 percentage point rate increase at last month's meeting, a step back from the 0.75% increase hikes used through much of 2022. No participants anticipated that it would be appropriate to begin reducing the federal funds rate target in 2023. And markets and some economists, however, have yet to give up the idea that the Fed will just do that before the year runs out, reinforcing the communication challenge facing Fed Chair Jerome Powell and his colleagues this year. And the minutes said, the Capital Economic Chief North American economist Paul Ashworth said, they've all got long titles, our view is still that rapidly easing inflation combined with a notable drop-off in employment growth will alter the landscape quite dramatically over the first half of this year. After a final 50 basis points of tightening over the first quarter, taking the Fed funds rate to a peak of close to 5%, we will expect the Fed to be cutting rates again before the end of the year. Interest rate futures, too, showed traders largely sticking to bets the Fed will lift the target interest rate to just shy of 5% in coming months and then begin cutting it in the second half of this year. So I think we've explained that pretty clearly at the start of this article. Now we've got one last story today, so please make sure to continue hitting the like button. We're at 17 likes. Let's get to 25 before we cut off this live stream. Let's do that as our target for today, and then I am sure tomorrow Jordan will be back, if not on Monday, to continue on those collaborations here on the channel, where we keep you up to date with the latest cryptocurrency news every single day. Let's move on to the final article now. I just wanted to talk about this quickly. Logan Paul has threatened to sue CoffeeZilla over crypto scam accusations. So CoffeeZilla is a popular YouTuber. He has 2.35 million subscribers, and he basically tried to expose Logan Paul in a 3-part video series of why his cryptocurrency NFTs were a scam. And Logan Paul has threatened to sue him for defamation of character. And we've also seen in an article here, Logan Paul has said some of his NFT game developers were con men, but he didn't scam. Now, I believe his NFTs it was CryptoZoo, and it was supposed to be a fun blockchain game that can earn you money, but millions of dollars of investor money later, things are still broken. So that's what's going on if you're a fan of the cryptocurrency YouTube and everything like that. I just thought I'd throw that in at the end. Let's take a look back at the cryptocurrency prices to see what's happening here. We have $16,834 for Bitcoin and $1,252 for Ethereum. Again, we haven't seen too much movement overnight. We've seen a nice 4.4% increase for Ethereum. Taking a look down, let's take a look and see what's happening down here as well. We haven't seen much movement for Doge. Do you know what? I would have expected a little bit more since Bonk is doing so well. I need to stop talking about Bonk. I'm not endorsing Bonk. In fact, I'm disendorsing Bonk. Whatever the opposite is. It's up 80% again. I'm not a fan. I'm not buying. It's just very interesting to watch to see how this goes. We have seen a bit of a downfall this morning. I wonder if that will carry on. A lot of people are comparing the chart to the start of Dogecoin. I just hate all these meme coins doing well. It just ruins the cryptocurrency industry as a whole. But it is interesting to watch. I will stop covering that now. Litecoin is up 12.6% this week, and Solana is up 40%. We've spoken about that a couple of times on the channel as well. This is not a coin that I would be investing in anytime soon. I'm not expecting much for it, but obviously nothing is financial advice. We're not doing predictions on this channel. We're just talking about what's going on in the markets, factual information only. Good morning, Jamie. Thank you very much for tuning in. Please make sure to like. We're on 19 likes. Come on, let's get to 25 before we close off this live stream. Let's take a look at the Bitcoin chart and see what's happening over here, right? It's really difficult here because I have to keep the windows really narrow, so it's hard to really see what's going on. If we move out to the 4-hour chart, the RSI is indicating we're slightly overbought at 60. But the MACD is saying that we have slowing bullish momentum. We are in an uptrend though. We have higher highs and higher lows on the 4-hour chart. Now we're at 20 likes. Come on, let's get to 25 and then we can finish for the day and we'll come back tomorrow. But let's take a look down further and see if anything's happening down here. Polkadot up 6%. Polkadot's been treated terrible in this bear market. It has crashed so much. It was such a good project. It still is such a good project, and I believe in it for the next year. But right now it is painful to see that we were at, what was the high for Polkadot? $53 back in November 21, and now we're at not even $5, $4.58. That is painful, and that is a really good project. It's so painful to see, but it's also quite exciting. It's a time for accumulation, not necessarily of Polkadot, maybe of Polkadot. I'm not giving any financial advice away, but it's a brilliant time to be in cryptocurrency right now. It's starting to feel really exciting. It feels to me like we are very close to the bottom, and we can start looking at accumulating and doing much better things where we can tune in every day and say the market's up again. We've got loads of profits for the morning. I'm really looking forward to those days again, because it's been a painful 2022 and we deserve to see some nice profits now. I think the time has come, so it's going to be very exciting in this space, and we're going to get this YouTube channel to 100,000 subscribers this year. This is our goal, so please help us out with that and like and subscribe. That is all from me today. We're on 22 likes. We'll have to stay on for 5 more minutes. We're so close to 25. Has anybody got any questions in the chat before we finish off? We've got Steve B talking about his prediction to see $15,000 to $20,000 Bitcoin for the next 8 to 12 months. It wouldn't be bad. It would be very nice. I expect if that were to happen, then we'd see some nice altcoin rallies along the way. We'd see some groups of altcoins performing particularly well, like dependent on their utility. We might see gaming altcoins do well. We might see like we saw last year when we saw Steppen do well and all the move to earn applications perform well. We may see things like that. Picking which utility will do well is the real question for me over the next couple of months. We will just see some industries boom within cryptocurrency, and it'll be very nice just to take some profits, and then we can buy some more along the way. Hamzak, hello. Thank you very much for tuning in once again. Hamzak's here every single day, enjoying the cryptocurrency news and learning as much as possible. Morgan J said, back to work for me. Love what you're doing. Thank you. Stocker, the Genesis problem, we did a whole section on that in yesterday's live stream. If you want to check that out, and I'll see if there's any more news on that to cover in tomorrow's video, but I don't believe there is. We're still waiting to see what is happening. Does that deadline the 8th of January, I believe, and what date is it today? The 8th of January is Sunday, so we'll cover that in Monday's live stream when we find out what's happening with that. If not earlier, I'm sure we'll find out some more information before then. And that is all for today. I think we've hit 25 likes, I believe. So thank you very much I hope this live stream isn't on... Is this live stream? Yeah, it is. Okay, perfect. So that is all for today. Thank you very much for watching. Please like and subscribe and press the bell notification button. I can't have said that enough times today. And make sure, actually, some very exciting news. We have the website going live at some point this month. I'm not going to tell you the date because I think that is Jordan's job. He will share that within the next couple of days, possibly on these live streams or on the Twitter profile at CryptoSavingEXP. We are going live, so if you want to be one of the first people to use the site, just head over to cryptosavingexpert.com and type in your email address, press sign up here, put your email address in. You'll receive a newsletter every Tuesday at 11 a.m. and you can also be one of the first people to use the site. It is very exciting to see it all come together. Obviously, we have our own version where we can all test it out now, and I've been taking a look at it. It looks amazing, and I'm very excited to share that with you all. And the whole team has been working super hard on it, so it's nice to see it all come together at the end. But that's all for today. Thank you very much for watching. Goodbye.